I'm Brownfield's Meghan Grebner. With me today is ag economist Charley Martinez with Univeristy of Tennessee. Charley, it's great to catch up with you at the start of the week instead of at the end of the week.
Yeah, it's good to see you too. It's kind of weird meeting on a Monday.
It is, but we will make do with what we have. All right. So we're going to talk a little bit today on Friday after the markets closed, after Josh and I actually taped our latest weekly livestock market update. The president announced that he was requesting and launching an investigation into price manipulation with processors. So, um, kind of walk me through this because this isn't a new story in the beef sector.
Yeah, so Friday I thought it was going to be a normal day, and then the evening it turned into, kind of talking about something that has been systematically around for quite a bit. So, the talks about possible price manipulation and market power by packers is something that not only in my career I've seen a couple of times already, but it's something that's been around for quite a while. And a quote that often gets used or cited a lot goes back to Senator John B. Kendrick, and the quote is, "This quarrel between packers and the producers of this country ought to have blown over 40 years ago, but we still have it on our hands." That quote is from 1919, and so I think that quote still applies to today, and it's at a time where we usually expect some type of talk about market power or things of that nature during cattle cycles, but right now it's coming at a time where if we look at the market, the packers are probably the ones suffering the most in terms of profit and loss, and probably sitting a lot more with losses than profit on a per head basis.
So let's talk a little bit about this competition element in the market. How does that, when we're talking about competition and we're also taking a look at slaughter capacity as well, how do those two kind of intermingle and how are they connected?
Yeah, so I think if we just start with each one individually and then we'll intertwine them. So if we think about just market power, I think that's more centered around market concentration. So it's since the 90s, basically four firms have had majority over 80% of all the market share of packing capacity in the nation. And now some of that has changed hands. Ownership has changed hands since the 80s, but for the most part, it's been four firms. By nature, some folks will think, well, market concentration has to eliminate competition. And I mean, that's a logical thought in terms of, well, if they have the way to manipulate and have power in the market, they're going to exert that power. And academics and in research, in particular to the ag econ side, have long studied this. And one of the things that has come out of the studies and everything that we've seen is there are instances where there is maybe some slight signs of possible market power or market manipulation, but on general, there's not really much research that supports that there has been much market manipulation or market power. And then so then that kind of thinks, if you think about that from a market standpoint, it's like, okay, there's no market power, but what about, slaughter capacity? Because we have ebbs and flows of a cattle cycle where we have a lot of cattle, then we don't have as many, and we have this boom and bust. And how does that work its way through the beef supply chain? And I think it's important to remember that the beef supply chain, and I think I've said it with you, is if it's not it's one of the most complex protein supply chains in the world. And when we think about the linchpin or where we have a bottleneck within the supply chain, it is at the packing level where we have all of the animals that we're producing through the fed cattle market end up getting harvested and then work their way through the wholesale and retail side of things, eventually to the consumer, whether it's domestic or international. And I think when we know that, and so we think about it, it's, well, what about the packing side in terms of capacity utilization? What does that look like? How has that changed over time? And we've seen some packing plants come offline, like in 2013 and 14, whenever Cargill pulled the Plainview plant off and closed that, which took off around 4,500 head of cattle being slaughtered every day out there. And so if we think about that from that perspective, then the question becomes, well, now they just increased their market share within the market, and is that a problem? And I think it's important to remember that I heard a really good economist one time talk about the market in terms of, just because you're a big fish in a pond doesn't mean you act like a big fish. And from that perspective, we still have not seen any evidence of market manipulation. And I think it's also important to remember that that is on average throughout the whole industry. Because as economists, we only get the big five market data reports and we aggregate that to a national number. we don't get to see individual firms inside each individual market. So, is there an instance that there might be something fishy or market power being exerted? Possibly, but there's no way to know that outside of having a profit and loss of a market with all their firms and looking at it.
Charlie, there's been conversations in recent years about investing into smaller processing facilities and expanding and helping to increase competition. How does that potentially play out? And is that the result? Is that the answer to diversifying this market share so there aren't so few who control so much?
Yeah, so I think that's a good question, and I think a question coming off of COVID-19, that was a question that was asked by the Office of the Chief Economist, and it led to myself, Dr. Chris Boyer here at UT, Josh Maples, of course, that also joins us from time to time, Dr. Jason Lusk and Maylene Ma at Purdue, to answer that question and investigate in the current landscape of in 2020 and 2021, how resilient was our our beef supply chain, and what would it look like if we changed the way it looks in terms of having more smaller regional type packing plants versus having fewer large packing plants. And so we have to think about that from a resiliency standpoint, but also an economies of scale standpoint. So the reason why we are where we are as an industry is because of economies of scale, efficiency, and then also if we think about just the cost of production. Right now, the way it's structured, the larger plants help in terms of being able to sustain periods of bad margins or profit margins, for lack of a better term. And because of that, they also have the resiliency to bounce back from something like COVID-19 or a packing plant fire like we saw in Holcomb in 2019. And so we're able to adjust and have the flexibility to adjust to an ever-changing supply as we've seen in those. Now, if we were to break that up and break it into smaller regional packing plants, we decrease our resiliency, but we increase a little bit more of where our reach is in terms of having food availability, but that comes at a cost, meaning the smaller plants will have to compete with other smaller plants in order to secure cattle. And sometimes it could be in areas where there's not a lot of fed cattle. And so that could actually raise the cost of the input of a fed cattle for those small regional plants. And then they also still have to market that. Well, say we have that in effect, then if we have another COVID-19 outbreak, there is a possibility that our system will not be as resilient because of we've now opened up kind of from a linchpin standpoint, we opened it up where we have smaller pockets of smaller supply, and if something was to go wrong, they might not be able to adjust because they don't have the economies of scale to adjust to the cost in the short run. So there's this give and take, but I think at the end of it, it's resiliency. And throughout the last pandemic, we saw that the beef supply chain. I do acknowledge that sometimes there was not beef in certain shelves throughout the country, but for the most part, it was really resilient. And why we saw meat not being on the shelves and what does that lead to? There was papers written by myself and Glenn Tonzer and Jason Lusk and those folks examining that. But at the root of it was it came down to marketing and how people were purchasing meat and product ahead of the COVID-19 pandemic, and then how you work your way through it and being able to keep up. And I think if we just think about it, if you're like, well, resiliency, what does that mean? Boil it down even into a simpler example. Right now, if we have an industry that is losing money per head, and they're at large quantities, imagining breaking that up to a group of smaller companies and divvying out that net loss amongst those companies. And sometimes it's going to be greater, sometimes it could be less. But then in the short run, how can those companies, or how will those companies be able to fight their way through the economic downturns from a market signal standpoint? I think that's where our research showed that it might not be the best for a net welfare way, from a welfare way of thinking.
Before I let you go today, we've seen so much market volatility. It's been probably what, 3, 4 weeks at this point where we've
Hmm.
seen big news elements hit, sometimes while the market's still open, sometimes after the market is closed. Without trade data and export data and some of the other facts and figures that we get, does it enhance or increase the volatility and the market reaction because we're not seeing fundamental or factual data to keep the market moving in a fundamental way?
Yeah, I think you hit the nail on the head there. I mean, basically all we have to work off is prices, right? So if we look at the choice and the select box beef price daily, or if we look at our local spot market or the futures board, that's about all the information we have. We have no idea what the export market is. We have no idea what consumer demand is. We don't know what the prices are at the retail space in the retail space outside of what we see ourselves at the stores. We don't have WASD. We don't have cattle on feed reports. So essentially we just see prices. We have no idea about demand or supply. And when we think about it that from that standpoint, that creates a lot of uncertainty. And I think Josh said it best when we first started entering the government shutdown was when we have increased uncertainty, that increases the volatility in the market. And I think what it does also, and I think we've seen, is it increases the swings, the volatility of the swings. So we can go from really high to really low, such that we can limit up, just like we did today. Following the news on Friday, we limited up today in the futures market. And then if we go back a couple of weeks, we were limiting down in the futures market. So I think we have these volatile swings, and whenever that's occurring, that leaves open risk. If people are not, if they don't have an adequate risk management program, whether they're in the packing side of things, the fed cattle side of things, or the cow calf producer, they could be on the bad end of a bad week whenever prices are down because of it. But I think we've also mentioned, when we last talked a couple of weeks ago, the cash market for the most part has still been pretty steady. It might be going up and down, but it's not having these large percentage swings like we're seeing in the futures market. But as the longer this has gone on, the nearby is becoming what the cash price is. And when we were thinking about the November and December feeder and live cattle contracts, that is what's becoming our nearby and becoming our cash price now. And so, there's been talks about deferred futures and all that. But right now, I think it's just one thing we do know for sure until the government reopens, or if we get some reports like it's been reported that we'll get this week, is volatility is.
And we are set to get a supply and demand report this Friday as
It's gonna be a busy Friday for
we
us.
it will be a very busy Friday because you're back this week. Cattle on feed numbers are set to come out on the 21st. But right, if I remember correctly, still no livestock slaughter data, still no cold storage, and
Correct.
still no export sales, resumption of export sales, correct?
Correct. As far as I
At
know.
least to
Now,
date,
by Friday, who
until
knows?
things
The
open.
government might not be shut down, and all of a sudden we could wake up Friday and have a mountain of reports to go through.
I think it's so interesting we talk so much about like finite numbers, fact-based decision making when it comes to risk management, using that data and that information. And without it, these reactions from the markets are so volatile and emotional. It's really interesting to sit back and watch, and I wonder like what economists of the future are going to go back and look at the COVID-19 pandemic and what happened to markets during it, or during a time like this where data is not available, and how does that change the game down the road?
I think that's gonna be something that I'll still be around hopefully in 10, 15 years, so I will be happy to start thinking about it. I mean, that's what we think about, and I think in our notes today, there's gonna be some lists of different research and popular press type articles that will be attached to the video as well. And in there, coming off COVID-19, myself and a lot of my friends, for the lack of a better term, we started doing a bunch of research together, looking at different ways to look at the market and with new data. And I mean, we've done a lot of different things, looking at the fed cattle industry and in the markets. And so, if someone's watching this and wants to look for more information, it'll be attached in those, and the links are attached in the write up with the video.
Charlie, thanks for checking in and kind of walking through this. I think it's having more information right now is a better way to digest maybe some of what's happening. And we look forward to chatting on Friday.
Look forward to chatting on Friday. Should be a fun day.
Thanks, Charlie.
We'll see ya.
I'm Meghan Grebner for Brownfield.